Today, we're going to talk about the one thing that can make or break your trading: reading the story the market is telling you. If you've ever felt like you're just guessing where the price will go next, you're not alone. But what if you could actually see the clues that professional traders look for? In this video, I'm going to show you the best performing candlestick patterns and how you can use them with support and resistance to find the perfect entry points. And hey, before we dive in, if you like seeing these kinds of breakdowns, don't forget to hit like and drop a comment. It really helps push this channel forward. Alright, let's get straight to the point. One of my absolute favorite and most used candlestick patterns is the engulfing candle. I've used it in so many of my previous videos because it's just that reliable. So, what exactly is an engulfing candle? It's when the second candle's body completely covers or engulfs the first candle. But here's the thing. As I've said before, you can't just take a buy or sell position based on a single pattern. You always need to combine it with other price action methods like support and resistance to get that extra confirmation. On the chart here, you can see that price dropped to this level and then reversed significantly, making this a strong key support level. Now, watch what happens when price comes back to this level. The candles get smaller and smaller, showing that momentum is fading. And finally, a bullish engulfing pattern forms where a big green candle closes above the previous red candle. This tells us that sellers tried to push the price down to touch and break the support line, but then buyers stepped in, with power pushing the price back up and closing above the last red candle. For even stronger confirmation, you can wait for the next candle to form, which is another green candle. This is a great opportunity to take a buy position. Now, let's look at another example. So, here again, you can see that price moved up toward this resistance area and was rejected multiple times before turning back down. Now, price moves back up to this level again, and we can see a fake out happen. Price pushes up past the resistance level, but then quickly falls back down. This is followed by a bearish engulfing pattern, where a red candle completely engulfs the previous green candle. This tells us that the buyers failed to push the price higher multiple times because sellers kept stepping in, eventually pushing the price back down. This is a great opportunity to take a short position. Remember, price movement can be easily predicted just by watching how the candles behave. Now, the next pattern is called the candle rejection pattern. This pattern forms when one of the candle's tails is significantly longer on one side, showing a strong price rejection. So, let's look at this example. Here, you can see price move down towards this level before reversing upwards, making this a support point. Now, when price returns to this level, we can see a huge price rejection in the form of a rejection candle. This tells us that at one point, sellers pushed price below the support level, but then buyers stepped in and pushed the price back up into the support level. For further confirmation, the next candle that appears is a big green one, which gives us further confirmation of a reversal. So this is a great opportunity to take a buy position. Now, the next pattern is called the shrinking pattern. This pattern happens when candles get smaller and smaller as they approach a key support or resistance level, which indicates a loss of momentum. Let's look at this example. Here, you can see price moved up to this level and then returned back down, so we can draw a resistance line here. Now, when price approaches this level again, you can see a cluster of smaller and smaller candles before a very small candle with a long tail appears. After seeing these signs, we can predict that price will reverse in this area. But for further confirmation, we'll wait for a big candle to form, as you can see here. So, this is a great opportunity to take a sell position. I'll show you this example on another chart. So here you can see that price went down and then went back up, making this a key support level. Now, when price returns to this level, we can see a big candle followed by a smaller and smaller candle as it gets closer to the support area, indicating a loss of momentum. Then, a big green candle appears, showing that buyers are stepping in with a lot of force, which confirms that price is about to reverse. So this is a great opportunity to take a buy position. Remember, you can tell a lot about what's actually happening in the market. just by watching the candle's movements. So, I've just shared how you can enter a position using price action, and now I'm going to share the best technique to exit your position so you can maximize your trading profits. So, let's begin. The first thing we need to do is identify our stop loss point. We'll use the ATR indicator for this. First, let's say we're taking a sell position here. The way we'll determine our stop loss is by looking at the ATR value. All you have to do is hover your mouse over the candle where you're entering your position and look at the ATR value. Now, I'll show you how you can place your take profit to maximize your gains. For this strategy, we'll also use the concept of momentum decline. Let's say we took a sell position here. As you can see, the candles get smaller and smaller, which indicates a decline in momentum. This is our first sign that we should close our position. Soon after, you can see that the candles go flat and then reverse, as a big green candle appears. Based on price action, we can see that momentum has shifted up. So we'll close our position here and take profit. Another way to close your position is when price no longer shows a clear trend, like in this example. Let's say we took a sell position here. Initially, we can clearly see a downtrend, but the next candles form a sideways pattern. It makes it difficult to know where the market is headed. When this happens, I usually close my position here. But if you have trouble with this method, you can always use a fixed risk to reward like 1 to 1.5 or 1 to 2. It's always best to back test and find an entry and exit style that fits your trading style. Alright guys, that's pretty much it for today's video. We went through some powerful price action patterns, engulfing candles, rejection candles, shrinking candles, and most importantly, how to actually use them with proper exits. The key takeaway is this: candlestick patterns by themselves are just signals, but when you combine them with structure, key levels, and momentum, they become a complete strategy. And hey, if you made it this far into the video, drop me a comment. Let me know which of these patterns you already use in your own trading, or which one you're going to try after this. Don't forget to smash that like button if you found value today, and subscribe so you don't miss the next strategy breakdown. Alright traders, I'll see you in the next one. And as always, trade smart, stay safe.